Thank you very much for joining us. My name is Colin Fain. I'm the CEO of Agronometrics. And in this case, I am also the primary investigator behind this study. Before we get started, I definitely want to thank the entire team for their help in bringing this together, not only for their support in the actual data extraction, processing, and everything that's technically involved in creating this study, but at the same time, we're also producing the IBO report, which is nearly 300 pages this year. That will be released next week in South Africa. And so the fact that I was able to do this study while the rest of the team took care of this massive project on the other side, I really have to thank them for their support on that. And I also want to give a big thank you to our sponsors. They made this report possible, not only financially, but also their curiosity and their eagerness for discovering what might we find in the data regarding quality has been one of the driving factors for this investigation. And the fact that they took a chance on us. So I kind of came up with the project, put it out there, and without having any guarantee of results, these companies invested in this research to bring it to light. So definitely very appreciative of their forward thinking on that matter and their faith really in our ability to get these results and bring them to light. So the topics that we're going to cover are looking at the headline results, diving deeper into how quality is measured. So this is where we get kind of more into the nitty-gritty mechanics of how we got the headline results. We'll cover limitations of the study. So what doesn't this study tell us? Next steps, how to improve on what we found so far. Then we'll have questions and answers. And finally, we'll give you a QR code where everybody's able to download the full version of the report. So starting off with the headline results. And this is our big chart. This is our comparison of premium category varieties versus standard category varieties. So a premium category variety is a variety that receives a above average price in the market, and a standard variety is a variety that receives a below average price in the market. And we're going to go into how that's calculated and selected later on. But what's really interesting is, on one hand, there's a considerable difference between these two categories, to the point where the results for, let's see, I got this big black bar covering up the numbers at the bottom. No. But to the point where the difference between the premium fruit and the standard fruit, at least last season, was $2.28, which is a notable difference. That's a really interesting perspective. So, for example, if you have one of the standard varieties, such as Ventura or Biloxi, the average for the 24-25 season was $6 a kilo, which is a pretty good average. I mean, keep in mind, that's not the average throughout the entire season. At the beginning of the season, there were very high prices. We're going to see that shortly. And then they dropped considerably during the bulk of the exports. But if you had a premium category and the variety with the best coverage in the premium category is Sequoia Pop, your average would have been closer to $8 a kilo. And it's an objective measure. Um, and this can perhaps speak a bit about business plans and other decisions that people make as they look to plant different varieties. But I think there's a second perspective that we're able to gain from this data set that's very important, where we can see the difference between the premium category and the standard category grow. So back in 2019, it was almost the same. Then we start seeing the difference between premium and standard expand in 2020, 21, and this is a trend that continues at a relatively steady rate, including through 23, 24 when all the prices spiked and continuing into 24, 25. If we look at just measure the difference between the premium and the standard categories, this is what the arbitrage between the two categories looks like. Or this is the bifurcation. So it's just the difference between premium berries and standard berries. And we can see how that's growing relatively consistently, without a doubt over the last 3 years. But if not at least 4 years, we've seen this trend consistently diverging. And we're going to go into our thoughts on that a little bit later on. So if we take a disaggregation of the 24-25 season and look how premium fruit performed um, throughout the season compared to the standard fruit, there's also some pretty interesting insights that we're able to capture from this. On one hand, we can see that premium fell just in line with the standard. So the spike in price we can pretty much attribute to a delay on Peruvian exports, and this is kind of still a hangover from El Nino the year prior, where all of the production was delayed as much as possible to try to capture as much market as you could. And because of that, companies didn't prune. Because they didn't prune, the next year's production was delayed. As this all came into effect, we saw these really high prices at the beginning, and then they fell off. And if we look at just the premium category fruit, the prices remained high, and again, at around that $2 difference. And that $2 difference was observed pretty much throughout the season. The height of the season is right around here in October, so right after the big fall in volume. And we can see how the standard varieties, they received a very good price at the beginning of the season, and then they came down to where in November, some of the average price for fruit like Ventura Biloxi would have been around $4. That same period would have given you $6 for one of the premium category fruits. But the important thing, I think, to take away from here is that the variance, so this growth that we're seeing between the premium and the standard varieties, is not dependent on high prices. That's kind of what we're testing here. So even when the prices fall down to about $5 average, we're able to capture that difference between the premium category and the standard category throughout this throughout the season and throughout this massive variance in pricing that we're able to observe. This speaks a bit about how this report was created. So not every export record has information on varieties. We can see from our data that about 20% of the records had useful information on varieties that we included in this test. And this is kind of what that looks like. So you have the entire season in red. So this is all of the volume. And then in darker red are the reports that we have with varieties. You can see kind of what percentage of that is standard and what percentage of that is premium. If we isolate just the information that we have with varieties, it does generally follow the curve of the season. It's a bit subjective how representative that is, but it does seem to be representative. I think it's also interesting that the premium is more heavily weighed. The premium varieties are more heavily weighed towards the beginning of the season, which goes in line with what you hear kind of from producers or from the markets about the distribution of quality coming out of this origin. And this is just taking the same reports that mention a variety and seeing kind of where the volumes lay, as it were. And if we look at the last couple of years, we're able to see considerable growth in um, on one side in the number of reports that include varieties. 23, 24 is a bit of an exception. That's again El Nino. The production itself was decreased by 30%. And so that by its nature is going to affect the number of reports that we make available. So I'm not sure how representative this data point is, but I think it's really interesting to see that if we compare the 22-23 season, which about where premium accounted for about 15% of the data points, we're seeing that grow considerably to more than 30%, I believe 30%. Honestly, I have those numbers at the bottom covered up, which is a bit frustrating. But we're seeing a considerable growth in the share of premium within the subset of data that where we have a variety identified. Again, I'm not able to say how representative this is. This is definitely representative of the data points that we have. I'd like to think that we're able to extrapolate some of these findings to the greater production of Peruvian or to the greater body of Peruvian exports, but I can't say so statistically. So our takeaways from the study would be in the 24-25 season, premium blueberries were paid $2.28 more than standard. So that's a pretty headline number. And the impact of that is not minor. The difference between qualities is increasing. So the price between premium blueberries and standard blueberries is getting wider, and that appears to be independent of pricing levels. So that's not a phenomenon of 2023 when we had really high prices. We're able to see that phenomenon continue at a steady rate, even when the prices fell in the 24-25 season. And to the best of our ability to measure, the volume of premium fruit on the market is growing. So it's not the case where, so when you think of like the price elasticity of demand, where you have more volume coming on the market and the price decreases, when we're looking at premium fruit and the differentiation between them, that's not necessarily the case, at least not yet. When we have the more premium fruit, the bigger the difference between premium and standard appears to be. So then the next question is why? How, like what's the logic behind this? And so this kind of takes us to our hypothesis. We can't test these statistically. This is just kind of what we believe is happening in the markets. And I'll let you guys read it, but the quick summary is I believe that premium pricing is being achieved because consumers are willing to pay for it. Some of these new varieties are offering a better eating experience. And as that eating experience gets down to the end consumer, they're putting more money into the category. And as we're able to measure through the FOB data, FOB origin from Peru, some of that money is making it back to producers, which is an interesting point to measure within the supply chain. Also, when you look at the steady increase of that premium over time, that kind of speaks. I mean, this is again a hypothesis. I'm not able to statistically test this, but what I believe, or at least not with this data set, but what I believe is happening is consumers are getting a better eating experience. And as they get a better eating experience, they're willing to put more money behind that. And this could reflect not only newer varieties coming on the market, but also premium varieties that are on the market maturing and kind of coming into their own. We're going to see that a little bit later on with, for example, the development of Sequoia Pop in the market, where it started, where the prices were, and then how that has developed over time. So that's our hypothesis for what's going on. This pretty much means that the market in Peru is not driven by volume. Quality is a factor that we're able to measure within the data set and should be a consideration for people's business plans going forward. So this takes us to our next section. How is quality measured? And I'll get a little bit of water to get through this. So the first thing to understand is what data are we using to do this study? So the prices are FOB origin. Our data set for this is SUNAT, who's not only the export authority in Peru, but it is also the tax authority in Peru. So basically what we're looking at is the tax records for Peruvian exports. The prices represent basically net returns to exporters. I suppose I wrote returns very incorrectly in this slide. But so this is the net sales that exporters are able to receive for their fruit as reported to the tax authorities. So it's as good a data set as we're able to use to obtain the perspective of, or the financial perspective of an exporter as this information comes in. This is the data that's made available in the global trade data. And a year ago, we launched the degree of certainty tool. And what this tool does is, considering we want to capture what's going on in Peru as accurately as possible, what we do is every single week, we capture 2 years of history from the data set. And that ensures that we're able to capture any changes and any movements any updates that are done to the data in as near real time as is practical. So, and with the degree of certainty tool, what we do is take a snapshot every week and compare the latest data this week to how this performed going forward. So this means that, and we can kind of see that in the purple ranges of these prices. So using the degree of certainty tool, we can see that prices stabilize after around 10 weeks. So that's how long it takes, because every export goes out with with a declared value. That value is wrong. It is categorically wrong. But as the money comes back into Peru and as companies need to justify the income that's making it back to the country, then the numbers start to adjust themselves. And after 10 weeks, then we see that we have pretty stable data. And that is the information that we're making available. That is the information that we're using for this report. There's some companies that use transfer pricing. Because that does not give any feedback on what's going on in the market, transfer pricing has been excluded. We can get into more detail on that in the question and answer period if you guys wish. And it's also important to realize this does not capture the real premium for the fruit. So how much more value does the end consumer believe this fruit has? What this captures is how much of that value that's happening at retail on the other side of the world is making it back to the Peruvian producers. And so it gives us a really unique perspective and a very real and relevant perspective for companies that are planting and looking at what the value for a specific variety might be. Um, so, and this is the actual data. So every single one of these points is an actual price. And you can see how the the volumes are distributed throughout the season. So where the areas are darker, that is obviously where the bulk of the shipments are happening. And then there's no light that you can kind of see on either side of the average price. And then out here on the fringes, you have a lot less records. These are less representative of what's going on. So what we wanted to do was measure how each variety was performing. And we tried several ways of doing so. The methodology that worked the best was really a simple one at the end of the day. We tried some really complicated things, but the simplest is usually the best. And all we did was subtract the individual prices from the market average. So every single one of these dots was subtracted from the red line. And that gave us this chart. And I think this is interesting for a couple of reasons. One of them is obviously that steep drop that we saw in prices at the beginning of the season has been completely removed. Also, the distribution of points from one week to the next seems to be relatively consistent, be it on the upper side of the prices. So if we look here around August, September, we can see in August, September, the prices were really high. But the distribution, once they've been subtracted from the market average, is relatively consistent with the rest of the season. So if we look at November on the other side of the peak of the season, down here, that what this methodology seems to be offering is a way of standardizing across the entire season so that you can easily compare the prices when the prices were high to the prices when the prices were low. And so this is the methodology that we use to make all our calculations from here on out. Now, imagine this is a topographical map where the darker areas would have more of a relief, so they'd be higher than the lighter areas. So out here, there's barely any data. That would be very, very flat. In here, this would be very, very tall. And take this whole thing, lay it on the table on its side. And what this gives you is a histogram. And this is pretty much exactly what we look. It's like a cross section of the entire season all stacked together. And we can see the height of the season where the distribution of points within buckets are. So this is every price from from 0 to negative 0.5, then negative 0.5 to 1. And these are all the negative prices on the left side, all the positive prices on the right side. We're going to get more into this later on, but it's important for this perspective that the distribution is normal inside of what could be considered a normal distribution. And that's important because then it makes all of these statistical methods that we want to use valid. So when we use a confidence interval or a standard deviation, those are designed to represent a normal distribution. And this kind of looks like a normal distribution. So that's statistically, that's important. And it also makes an interesting chart. And then before going into more detail, we can look at what kind of coverage we're able to obtain from our data cleaning, where we looked at reports with varieties. Again, it's not every report in the entire database. So we can see total number of reports, reports with varieties, and here's the coverage. So generally speaking, we could say that that coverage is increasing. Although we did have higher percentage in 22, 23 than we're able to obtain in 24, 25. The idea is also that we increase this coverage, and we'll go into that in next steps. And this all takes us to, admittedly, the most complicated chart in the entire report, but also this has a lot of depth to it, and it speaks a lot about what's going on in the market. So using that measure of the individual prices against the market average, so all that standardization that we did in the previous slides, we're able to calculate the average for each variety that we have identified in the data set. This does not represent every variety that we're able to capture in the data set. In this chart, we're able to see every variety that has more than 100 reports. Anything under 100, we cut out to make sure that what we're offering in this chart is representative of the actual market prices. The dots represent, kind of like the cascading dots represent the market average for each variety. The colored bars at the bottom is the number of reports, which you can see on the right axis. On the left, you can see the prices, difference from average. And the area that's floating around the dots is the confidence interval. So, and the confidence interval is the tool that we're using to define what is a premium category and what is a standard category. A confidence interval pretty much tells us, based on the standard deviation, so how spread out the histogram is, so like what we saw in the previous chart for the entire data set, and the number of reports, how confident are we that the average that we're measuring, so this point, is really this point. So what that says is when you have very few reports, so say you have, I mean, I don't know, for Rami, they have about 100 reports. Unless all of those reports are concentrated in a very, very narrow range, then you're going to have a confidence interval that's wider depending on the standard deviation of the results. If you have, and that means that the average is the average. What the confidence interval tells you is how much, with a 95% certainty, the real number that represents the average for every Rami price that could be represented in this data set will be within this range. So it's a statistical measure that says, okay, we can say with confidence that given the distribution for these data points, the real average is from here to here somewhere. When you have more data points, that narrows the confidence interval. So for example, in Sequoia Pop, where we have more than 1,000 data points, the range for the average price is very, very tight. And that represents that we have more confidence in what the average price is for Sequoia Pop. And so we did this for the entire data set and every variety that we have available. And so where the confidence interval was above the market average, meaning that the price has a statistical significance over the market average, we considered those a premium variety. Where the confidence interval was below the market average, we considered that a standard variety. Where the confidence interval crossed the market average, and we're not sure if the average is above or below the market average, that was then considered a undefined or unspecified variety. We don't know where to put it. We don't know what bucket to put it, or it kind of follows the the market average. And so that's how we're able to objectively construct a pool of premium varieties versus a pool of standard varieties. And there's a bit more complexity that comes into this, but we'll try to explain this in more detail going forward. So now I'm going to pick on the two varieties that are best represented in the data set, and we can look at what the prices and what the distribution for those varieties are specifically. So here, and going back to the histogram and how that was calculated, this is the histogram. It's the exact same calculation, but isolating only the Sequoia pop prices. And this is interesting because it talks a bit about not only like what the structure of the data is, but also how this data might relate to actual production. So if you have a field of Sequoia pop, not every blueberry that comes off of that field is going to be the greatest blueberry in the world. Some are going to be fantastic. Some are going to be average or normal per se. And what this distribution does is it illustrates that. So some Sequoia pop fruit receives less, considerably less than the market average, while some fruit receives considerably more than the market average. The interesting thing for a producer is going to be what the average is. So everything that comes out of a field is a distribution. The data that we're able to collect on pricing is also distribution, where some of the prices are going to be really good, some of them are going to be really bad. The average, so the average price for the entire harvest over the season is considerably above the market average. And we can see kind of where the most reports are represented here, which is between 1.5 and $2 above the market average. And again, this is as relevant to when the prices were high to as the prices were low. And then we can see the exact same thing for Ventura. So if you remember from the previous chart, Sequoia pop had a price that was considerably higher than the market average, and Ventura had a price that was just barely below the market average. And so we can see that reflected in these histograms as well. So Sequoia pop is considerably above the market average there, and Ventura is just left of the market average right here, where the most reports are between 0.5 to $1 below the market average. You can see the distribution of the rest of the points. There's a couple caveats that are relatively important inside of this study. It doesn't take into account organic fruits. We have no reliable way of measuring it within the data set that we currently have structured. So some of this bump that we see on the right side with higher prices might very well be differentiated fruit that is also Ventura, such as organic. I'm not sure. We don't have visibility at that level. What we do have is the ability to see the distribution for the fruit that's labeled as Ventura and what that looks like and where those averages lie. So if you have a average plot of Ventura, this is kind of the performance that we're able to measure from last season at the very least. And so by grouping the individual prices from each one of these varieties, we're able to create these lines. So the premium index shows us how the premium varieties are generally performing. And then the standard index shows us how the standard varieties are generally performing. And this is what we're using to kind of, independent of the variety, measure performance for standard or premium, as it were. There's a bit more depth that we added into this model because, and one of the comments that we received, which I think is very valid, is the market and the perception of value does not stay steady. So today's standard will be, or today's premium will be tomorrow's standard, or yesterday's premium is today's standard. And how can we capture that through this system? Because if we take a snapshot of how varieties are performing today and look back in time and apply those standards to everything that was previously, that might not actually be very reflective of what perception was back then, especially 5 years ago, and considering how much the industry has changed in that window. So what we do is basically recalculate the averages every single month using a moving average of the last 12 months. And what this allows us to do is track performance for each variety over time. How has, in this case, Sequoia Pop, again, I'm picking on it because it's the best represented premium variety that we have in the data set. How has Sequoia Pop performed over time? And we can see that it started in 2021, where the first reports came in. The confidence interval, which we can see in these gray lines, was massive. So we didn't have that many reports. The reports that we had weren't for a particularly high price. This is basically the brand new baby variety having teething, going through teething. In 2022, the next season, the premium established itself pretty definitively. And then it really came into its own in 2023, receiving a substantial premium over the market average. And then it settled down in 2025. So we can see, and this kind of tells the story of this variety, how it performed during the El Nino year, and then what it's currently doing on the market. And we can look at the same thing with Ventura. So, and it's interesting because in 2019, Ventura was receiving a very high price over the average. Um, and then as new varieties came on, or as we got more data points on this commodity, the price is readjusted to be much lower, still with a relatively wide confidence interval, but clearly established below the market average. It received its lowest price in 2023, where it had a very bad reputation to be heavily impacted by El Nino. So this again kind of tells a bit of a story of the variety and how it performed, especially how it performed that particular season. And we can now see that it's kind of recovered and come back to the market average. So that's the technical part. You guys have made it through all the statistics and everything else. If you have questions, by all means, we'll get to them in the question and answer section. I do want to go over some of the limitations of the study. So keeping in mind that the prices are FOB origin, so they represent at best the net returns for exporters as declared to the Peruvian tax authorities. The study does not represent profitability, and that's a very important point. Just because a variety has a high price does not mean that you're going to be able to earn a lot of money from it. To better understand this, it might increase the probability of it, but to better understand that, you need to consider, among other things, at the very least, what the yield is, the production costs, possible licensing fees, logistics expenses, and post-harvest handling. All of these can involve costs that would take away from profitability. So, like, I want to be very clear on that, that just because a variety has a very high price does not necessarily mean that it will offer high returns. But I can say that if a variety has a very low price, unless production is very, very cheap and very efficient, it will offer less of an opportunity for increased returns. And also, the study is not a forecast. This is a post-mortem. It shows where the industry has been and where it is today. From that, we can kind of make some projections going forward, but those are going to be for each individual observer and participant to make on their own. We do not currently have a forecast for where the price bifurcation is going, or market prices for Peru in general. So that's kind of the core of the presentation. From our experience working with the data, we do think that there's some improvements that could come about. On one hand, it's increasing the reports of varieties in the declarations. So increasing the number of reports where a variety is mentioned that we would be able to incorporate into this study. And again, we're feeding right off of the tax records. So every single exporter in Peru can contribute to this, where if you just in the export declaration mention what variety you're exporting, that will automatically be considered and included in this study. It's public data. We've already cleaned it. We have access to it. We have all the mechanics set up to be able to do so. So it's a very simple process where all an exporter has to do is mention what variety is being exported. As the returns come back into Peru relative to that export transaction, we're able to capture and update that value, and that updates the entire system and all of the varietal information, as well as all the premium standings for the varieties, as it were, going forward. There's also work that we might be able to do converging with the Senasa data. So that's the same data that ProArándanos makes available. It's also available from other sources, but what ProArándanos has been able to do, which is very valuable, is identified about 80% of the exports with varietal information. So even just merging as much of those two data sets as possible would be able to increase substantially, I mean, fourfold, the amount of coverage that we'd be able to use to track this index, and that would all be automatic. I mean, if we're able to tie these two data sets together, then those measurements and everything would kind of fall into the same structure that we already have established, which could be very interesting. Those are conversations that need to be had later down the road, and that is more complicated than just mentioning it is for a lot of reasons. But there's plenty of material to work with, and there's plenty of improvements that can be done to the system. From a processing standpoint, we still have to automate weekly processing so that every week as new data gets processed, as we have more and more insights to be able to use, we want to be able to make those available. Incorporate consignees. So that's a really valuable thing from Peru, is they also make publicly available information on consignees that we're able to tie back to the exports. So we'd be able to then see what are the strategies for a specific buyer on the varieties that they're getting. How much are they paying for those varieties? What is the difference from one set of varieties to another? And that could open up a perspective that we might not otherwise have available on kind of shifting the focus from the production side to the consumer side, and how this might be appreciated closer to the retailer and the end consumer. That's been mentioned to incorporate bulk shipments and standardize against bulks to make sure that we're accounting for the different shipping formats, which might represent a cost savings compared to other export formats. There is information on that, but more research needs to be done. as well as regression against complementing variables. Some tests have been done, but there's more work to do in that area. So for now, what we are offering is a perspective on the entire season, and that is what's being explored and offered as an output for this report. So here we have the questions and answer section. I'm very happy to take questions. We're also going to ask you guys some questions. So we have a poll that we'd like to put out. And Violeta, if you could launch the poll. And you'll notice that the first question is the same first question that we made at the beginning. So I am kind of curious to see if there's a change in perception from the beginning of the presentation to the second one. And we'll look at these questions at the end of the question and answer section. And let me see if I have any questions that are made available from the community. If anybody would like to explore any of the subjects that have here been covered, feel free to raise your hand or write in the question and answer section that's been made available. Do we have any questions other than the ones that have gone through the system already? Aha, we have a question from Long Bui. Does your FOB price include rejection or not? To an extent, yes. When there's rejections, so it depends a bit on the market and what the mechanics look like for money going from that destination country back to Peru. My understanding is in the US, for example, when there's a rejection, the exporter does not receive as much money as was initially planned. So then there's an adjustment that needs to be done once that money gets back to represent that their expectations of earnings did not meet up with reality, and so that they're not charged additional tax on sales that weren't made. So as that money comes back to Peru, that will automatically include all of the rejections that were made. So basically, fruit that was shipped that did not receive its expected export price. In that case, yes. My understanding is that China has a different methodology for accounting for imports and returning the money to the country of origin. But I think that to an extent, rejections have to be considered. So at least my understanding of how China works is whatever you claim the exports are going to be, that's kind of what needs to be, that's the money that needs to go back, kind of regardless of what the quality is or final agreement might be. But to make that make sense, the only way you'd be able to account for that is by discounting or adjusting future exports to make up the difference with whatever faults in quality or otherwise you might have had on previous exports. So in that sense, it also accounts for it, maybe not one-to-one on the reports that we're able to identify in the system, but it should be accounted for. Just because the money has to be coming from somewhere and you don't want to pay additional taxes where you don't need to, you need to justify the money that comes in where you do have to pay more taxes. So, and that's why using the tax records is actually a pretty useful tool for this study. For Fernando Martino, how do you think big sales and marketing budgets from large breeders and their licensees clubs are influencing buyers from supermarket chains in order to keep other very good genetics sidelined and not available to consumers on the shelves? That is a valid question, and I do not have the answer. It's very definitively not reflected within the FOB exports from Peru. We wouldn't have any visibility into sales and marketing budgets, and what the perception of value is for a specific varietal in front of the end consumers. But that is an interesting perspective to add. So, like, one of the questions in the poll is if people would be interested in a study on US retail data by SKU. And that study might be able to shed a bit of light on what the marketing budgets, what the impact of the marketing budgets are on the sale and premiums received for specific SKUs that then might be able to be identified with varieties or family of varieties, as it were. And that would also make an opportune, that would also be able to identify, for example, very good genetics, which might subjectively be able to be measured and blind taste testings or through other quantified methods or not, just whatever somebody's opinion is, and see how that's performing against the large licensee clubs that are out there. And if there is a significant difference, we might be able to measure it there, which would be an interesting perspective to add to kind of the commercial development of varieties along the supply chain, as it were. Juan Pula, could the study be segregated by market? Yes, it can be. We tried that. And there's still more research that we have to do. I think it'd be more representative to be able to do that with a larger body of varietal data. So the 20% that we currently have available, it might be very representative for some markets. It might not be as representative for other markets. More needs to be studied, and it's starting to get kind of nitpicky. So I didn't have the confidence in presenting those results as a part of this study, but it's work that we are still very interested in and want to continue expanding on. It is available in the data set. The sponsors, and not only are allowing this study to be made readily available, but they also have access to the data behind it. If you're interested in drawing your own conclusions from this data, I encourage you to become a sponsor, and then you can kind of play with this at your free will. From Carlos Madariaga, thank you for sharing this information. I noticed that most of the varieties presented are also produced in other regions. How close are you to gathering data that includes these other regions as well? Not close at all, particularly for Mexico, which is, I know, where you're writing from. This data does not exist in any other corner of the world. Peru is very special for that, and it just happens to be the biggest exporter in the world. But we have not come across this level of detail with export manifest data and tax records for any other country except Peru. The closest we'd be able to get is kind of retail data. That doesn't tell you what the return is to the exporter. That's going to tell you what the perception of the SKU is at the consumer, which is also interesting, and it kind of fills in part of this journey from exporter to consumer market, especially if you're looking at the US imports during the Peruvian window. But for other markets like Mexico, like Morocco, South Africa, China, there's no visibility that I've come across. Otherwise, we'd love to do this study there. That would be very, very happy. That would make me very happy and also just satisfy a lot of intellectual curiosity. Can your data break down by varieties, export countries, and size? It can break down by varieties and export countries. It does not have a ton of information on size. Some of the exports are labeled as jumbo. It's not a particularly large cohort. That is something that the exporters themselves would be able to add to the export declarations, and we would be able to capture, and that would give us more visibility over what the differentiation is specifically by size compared to the variety in general, which kind of takes me back a bit to the information that we have on Ventura. There was also kind of like that second bump of prices that were very, very good compared to the main body. These other attributes, the differentiators for a variety, might be reflected within those distributions, which could be relatively interesting to explore and better understand. Anonymous attendee, you mentioned you could only track certain varieties as they were tracked from export data in your 24-25 variety performance slide. What percentage of kilos exported went into your data set versus how much was excluded? So it was about 20% of the total volume was labeled with varietal data. So that means that 80% of the total volume did not have varietal data. Um, at, so it's a very good sample size. It is not a definitive measure, but I think it opens a door into what's going on in Peru, where before we didn't have one. And it is the based objective data that I've been able to pull together and find to shed some light on how varieties are performing objectively from Peru, um, and what those returns are representing for the exporters, which I think is hopefully adds some value to the industry and adds a perspective which wasn't made immediately obvious prior to this study. From Fernando Martino, very good study. Congrats to you and the sponsors. Thank you very much, Fernando. Well, that's kind of the end of the
Colin,
questions, unless somebody else wants to add another one.
Colin, I believe we had a raised hand from Pablo.
Yeah, thank you.
Yeah.
Thank you. Congratulations, Colin. This is great information. So let me just start with that. One question that I think you just answered it with a question before last, but it's not absolutely clear to me, at least. Is this report pondering the premium varieties into premium labels for those numbers to be high, so the perception for the good premium varieties into premium labels or premium characteristic or something that's going to highlight that particular clamshell, is it into the consideration on this report?
Not so, like, I think what you're asking is like, are we considering the attributes of the fruit as markers of premium fruit for this report?
Correct.
No. For this report, what we're looking at is the end result. It's whether producers, for whatever reason, are receiving more money for the exports of a specific variety. I think another interesting perspective to add is if we're able to get an objective measure of the attributes of these varieties, is kind of bring this information together and say, okay, of the premium category of fruit, what attributes were most prominent within this basket of commodities? And of the standard ones, what attributes were relevant there? And see if that might be able to offer the insights that you're looking for. But for this study, we're looking at the end result. So it doesn't really matter how good the fruit is. It might be absolutely amazing, but if it's not receiving a marginal return compared to the market average, or a better return compared to the market average, then it's not being considered as a premium category fruit. So that's we take out the qualitative effects of what is premium and what is not through this methodology.
Okay. All right. Thank you, Colin.
No worries. Any other questions? Giancarlo. I think you're still on mute.
Sorry. First of all, thank you for sharing this. I think is the analysis and the structure of the charts that you've created is quite valuable. Maybe I missed it, and I was trying to ask about the prices themselves come from the original export invoice, or these already are adjusted for final settlements?
It's both. So the initial registry that we have available is the declared value at export. And then we update the entire data set with 2 years of history, which captures that final settlement. So that's why, yeah, we can kind of go back in time in the presentation. And that's how we get this chart. So in this chart, you can see what the original declared price was. And the dotted line below is what the final settlement became. So like when the solid line and the dotted line kind of come together, it's where they converge, and it takes about 10 weeks for that to happen. So for all the final settlement to come bring money back to Peru. I hope that answers the question.
Yep. Thank you. Makes sense.
Another question. Let's see. Where am I? There we go. We did have some more questions come through from Fernando Martino. I encourage you to do something similar for premium genetics from Chile to the US, about 2% of total Chilean blueberry exports last season and expanding. I'd love to. We do have export comments from Chilean data. It works similar to the Peruvian data. We need to explore how much of those export declarations are populated with varietal information. But Chile is the only other country that I know of. It doesn't offer the same resolution as Peruvian data, and the data points don't update in time the same way that Peruvian data is made available. They just release it after the fact, so that it's got more of a delay, but then the data points are closed. So those are the official export numbers for Chilean exports from of blueberries. What we're able to see from Peru is that there's still some laggards that get updated in time. But if we're able to capture this in Chile, we will do a similar study, and very, very gladly to do so. Do you have this information per market? US, UK, Europe, Asia. Where it's available, we might be able to do something for the US, again, based on SKUs. So it's not going to show you the distribution of a specific variety. It'll show you what the labels look like in front of the consumer. So if you have jumbos, for example, you'll see a jumbo variety that's being sold on the market, and how that's differentiated against all the other clamshells, or the Swedish batch, or an organic clamshell or what have you. And we'll be able to see what that distribution looks like compared to all of the other clamshells. And we'll be able to say, okay, these are the premium clamshells, these are the standard clamshells, and be able to build an index like that. And we would be able to do that for the US. We would be able to do that for the UK. In other European and Asian markets, I haven't seen that level of data available. There might be something that I'm missing. I am obviously not omniscient. And if anybody knows of any data set that has this level of detail, by all means, let me know. We'd like to be able to complete as complete a picture as we possibly could. And especially as is in the interest of our sponsors, and they are willing to finance the work that goes behind bringing these insights to market. Andres Mujica. Also by size, because we do see a difference between 20 millimeter and higher as jumbo and 14, 19 milliliter as larger. I think in the clamshells, that will stand out pretty well because companies do make an effort to have a specific SKU for jumbo as opposed to the other SKUs. In the export comments, we would rely on the exporters themselves labeling that that export declaration as a jumbo to be able to capture that. But if we get enough coverage and we're able to draw statistically significant conclusions from it, that would be very interesting, for sure. From Longbui, do you mean that we can see both export price and settlement price? Yes. We can see both export price and settlement price. That is available through the Global Trade Data Service. What we're making, the conclusions that we're drawing for the Peruvian Price Quality Index is just with the settlement price. So we're waiting until the price is settled to draw these conclusions. So that's just settlement. But we also have both the export and the settlement price made available as our global trade data service, which we can offer more information about should you be looking for that. Are you using the USDA as a source of information? Maybe it can help. Not in this case. For the Peruvian Price Quality Index, what we wanted to see is the perspective of the Peruvian exporter. The USDA has very good information. We also make that available through one of our other services. But it lacks a bit of resolution to be able to make conclusions based on variety. It does have, for example, information on sizing. It does have information on the packaging formats, which could be really interesting. And I think that'd be really interesting to also combine with the retail data, because then you're looking at data that's already being generated at the destination market, and that's that many steps closer to the actual perception that's being generated from the end consumer. There's insights that can definitely be driven from that, but yeah, it's something that can be improved upon. All right. I'm going to go on to the poll and look at the results of the poll, which everybody should have on their screen. And the first question I wanted to compare to the question that we asked at the beginning. And so after we've given this whole presentation, the question was, in your opinion, does the current market accurately reflect the added value for premium fruit? 48% said yes. At the beginning of the presentation, 45% said yes. And so one more person believes that it's it's representative. So I pretty much didn't change a whole lot of opinions with that. 32 at the beginning said somewhat, 39 said somewhat now, and then 4% said no, 9% said not sure. So we have taken some people, one person out of not sure, and put them in a different category. But it's an interesting little science experiment. The second question is, have you made strategic decisions, pricing, sourcing, marketing based on quality differentials and blueberries? And the great majority said yes frequently, which I think is why we're seeing the difference in the data that we're able to appreciate. Will the price quality index help you justify your commercial strategy? Yes, and that's why this report is public. It's so that the industry can use it to use objective data to make better decisions and help their commercial strategy one way or the next. How useful did you find the webinar? Well, mostly very good ratings, and I appreciate that. And then, are you interested in being a sponsor? We got limited responses, but half and half, so that's good. I appreciate the support as well as for the US results. Great. So now we'll move on from the question and answers and move on to the report launch. Again, before we launch, I'd like to say a heartfelt thank you to all of the sponsors that made this available. And again, it wasn't just financial support. It was the belief in the team and our ability to do this, to drive these conclusions objectively and to the benefit of the industry as a whole, regardless of what their personal interest is. There's obviously nurseries that are our sponsors who might have a specific perspective that they're looking to complement their commercial activities from. But what we promised was an objective look at this, independent of any other interests that could be out there. And I believe that that's what this report has successfully been able to offer. If you'd be interested to speak to our team personally about this, we have a very busy travel schedule coming up. We'll be next week in South Africa, then at Fruit Attraction, and also at the IFPA. If you're interested in contacting us, please reach out to sales@agronometrics.com. We'd be very happy to set up a meeting and go into more depth in any of the reports that we've seen or any of the other products that we currently make available. And without further ado, get your phones out and scan. The full reports, which is about 15 pages and pretty much has all of the information that I made available in this report, is freely available. You can download it right now and get all of the details and justifications and logic behind it. And it's available on this QR code. So I will leave this up. I will thank you very much for attending. And we will work on getting the recording of this presentation out to the industry and the community towards the beginning of next week. Again, there's the whole trip to South Africa that's coming up, so it's going to be a bit intense, but we're very appreciative of everybody's participation, of all the questions, of the sponsors, of the team, of everybody that helped put this together. This is definitely one of those kind of standing on the shoulders of giants type of publication. At least I very much feel that way. It might be my name as the author, but I definitively did not do this alone. The entire technical team for making this data available and building the systems that allow us to work with it. Their contributions are not minor. There's been the modeling that's gone behind that. There's several years of work just in collecting and making the data accessible to be able to get to the point where we can work with it. Then the systems that have been put up to go through this number of records and extract the data and clean it and make it available so that we could study it. There's not a minor effort that's been done there. As well as everything in between. I mean, the marketing, the presentation of all this material. There's been a big contribution by a lot of people to bring these insights to you. And I want to thank them. Also let it known that this was definitely not me alone. That's putting this out there. There's a whole body of work that had to happen, and that's been brought by many people to make this study a reality. And hopefully for the betterment of everybody that's attending and a healthier industry in general. So yeah, that's the presentation. We'll leave this up for a couple minutes more should anybody else need it. Otherwise, I will be, well, muting my audio unless there's something else that somebody else needs. Thank you very much for attending.